Bob, good morning to you, and it's great to have you. We just had this long discussion on a bottom. What are you looking at right now, especially when it comes to some of those high growth momentum names?
I think the two gents you had on are not disagreeing. The demarcation line for me is the company generating earnings and cash flow now, or are they going to do, 3 to 5 to 10 years from now? The latter group got hurt really hard as interest rates began moving up. They're long duration stocks, just like a long duration bond. And believing interest rates and inflation are going to continue to go higher, I'm leery about that side. The big darlings, my favorite is Google, but I like others as well. But then there's another group of tech stocks. I'll call them the old tech stocks. I own some of them too. They're not the brightest lights, but their stocks have behaved so much better than a lot of the names we tend to talk about. I'm talking about Intel and Cisco, names, even IBM has been down much less than the market so far this year.
Yeah, you're talking about the legacy sort of value tech names that have performed better, but let's go back to Gundlach's comments earlier this week where he said that the Nasdaq is not a long-term bet. And when you look at these legacy names like an IBM, like a Cisco, they really have not gone anywhere for a very long time. So long-term, Bob, is there an argument to be made that perhaps maybe it's not the Nasdaq anymore? Where do you stand there on that?
Yeah, I think you're right. I am not making the case that IBM should be in your portfolio for the next 10 years. Don't get me wrong. But I think in an environment where we are a bit more defensive, where we're expecting interest rates to go up, you really have to be careful of valuation. Unlike when interest rates were zero, essentially, for so long, the sky is the limit. So, yeah, I want to own these companies that are really making a difference. Google's on this list. Microsoft's on that list.
Bob Dole, what are the strategies and the assets that are so important that it's worth investing in them, even if they're not profitable right now? So I think about Amazon 20 years ago that was growing quickly and reinvesting in the supply chain, the logistics network, turned out to be worth it. What about the likes of MongoDB, growing the Atlas database business, really making strong progress, but it falls into that category you're talking about of they're not churning out profits on a GAAP basis?
Yeah, I think the dynamics of the capital markets are going to work against those companies for a while here as investors come to adjust to interest rates are going up all the way over the curve, it would seem. So no matter how good that company is, they really have a headwind that they didn't have in the last 20 years. Amazon didn't have that headwind. They watched interest rates as they came to be a household word until recently go straight down, which these multiples went straight up. So I want to play where the earnings and the cash flow, I can touch it now.
But does that mean stay away from those names entirely, or does it just mean be careful with them?
Be careful, own less of them than you did before. Or said differently, if you looked at my tech portfolio a year ago, it was heavy growth and not much value. It's far more balanced now. Some of those names I mentioned, again, I'm not making the case that they're going to drive productivity and technology for the next decade, but they're going to be players. And I think we have to figure out where's the productivity going to come from that's going to enable the U.S. economy with not much population growth to really be a growth company. And that's where you get to the cloud and parts of software, wide area networks. They're the things that are going to grow.